On the call this morning, U.S. futures are flat despite strong earnings from Amazon, up over 5% before the open. But Juniper Networks is down 18% on disappointing earnings, 2 cents below estimates. And U.S. lawmakers continue to stumble towards the August 2nd deadline without a deal, pushing gold to fresh all-time highs. I'm Alex Steele, and the morning call starts right now.
Good morning. I'm Scott Redler, Chief Strategic Officer with T3Live.com.
And I'm Alex Steele with The Street, and together we will bring you the morning call. Happy Wednesday, everybody. Happy Wednesday, Scott. Let's get to these crazy markets. I got to say, volatility has to be the name of the game, right? I mean, we had, yes, the indices ended lower yesterday, but there were lots of green opportunities there. It still seems like the markets are pricing in an 11th hour deal. Do you still agree?
Every time I look at the indices and I see us down 70, 80 points, I'm like, how are we down 70, 80 points? All the stocks that have been acting well are up. There's still stocks making new highs. There's still a lot of things to do as these indices are slowly correcting as we try and get resolution to the debt ceiling, to some of the problems in Europe. But as of now, the indices are still hanging in there even though we're down 3 days.
So how do you manage that kind of, though, I mean, I would say intraday volatility, right? If you see across the board there's red, but there's so many green opportunities.
Well, when the futures come in and your stocks hold up, you could still own them. If the futures go up, if we were in an uptape and the stocks didn't go up, that means they're not acting well. You have to take some off. So you need to watch the relative strength of the stocks you own versus the market. And as long as they're hanging in there, you could stay with them, because if we do get some type of resolution, the way this market's set up, I think we could blast off. So let me show you the chart of the spiders right here. Look what we're talking about, guys. We are right here in this small flag pattern, right below the high from July and even the high of the year. With all these problems, the market's still holding above all these moving averages and looks poised for another move.
So you don't think that a resolution is priced in yet? It's just not pricing in disaster?
It's not pricing in disaster, and it's not pricing in resolution. Right now, it's pricing in good corporate earnings, because we have the haves and have-nots. We're seeing some really good reports. Stocks are getting rewarded. We're seeing some bad reports where they're getting kicked to the curb. So you have to be in the right place at the right time. What I want to watch from the support side, though, on the spiders, to see if a complexion does change. If we start breaking below this area on the chart, if we start getting below this, just say 132.50, or I would say my line in the sand is around 132, then I think we might start rolling over.
So would that be where you'd go short? Because that was my next question.
I don't know if I'd be going short, but that's when I would start really taking off some of the longs that I have. About 13, 14 longs. They're on the virtual trading floor. I've been trying to hold them for the past week and a half. And right now, I'm getting a little skittish as well. So if I'm getting skittish and I'm a professional trader, I got to believe that guys out there listening to all the Armageddon talk by the president, they're starting to lose confidence. And right now, we need confidence.
Okay, so